As the market pops up on 14th March 2022, much water has flowed under the bridge in 2 weeks. When it rains, it pours. The turmoil in the physical front between two warring nations has inflicted significant financial losses across the globe. If nickel should spurt 250% to $100,000 a ton in 2 days in the London Metal Exchange, and if the LME should cancel trades to prevent brokers and traders from going bust, it speaks of the holes in the risk management systems of these exchanges. A similar squeeze was seen in silver in the 1980s, but LME did not cancel any trades then. At the signs of semblance of softening of stance on either sides by Ukraine and Russia, the equity markets across the globe appear to be regaining some confidence, while interest rate markets are still gripping under the fear of rising or even runaway inflation. The benchmark 10-year US bond is at 2%, while the Indian counterpart is elevated at 6.86%. And the Indian 3-year IRS is also high at 5.58%. The dollar reserves of the Reserve Bank of India is at $632 billion. And the dollar swap window opened by RBI has effectively drained out rupee liquidity. So without touching the rates, the RBI appear to be restricting or draining out the liquidity in more innovative manners. Rupee closed at 76.44. And though FIIs have pulled out cumulatively more than 41,000 crores from the market during the month, in the coming week, we could consolidate closer to 76. The NASDAQ at 13,591, NASDAQ 100, and dollar index at 98.45 are looking for direction. But gold appears to be consolidating, dropping from $2,000 to $1,975 per ounce, while Brent crude is at $110 per barrel. The Bank of England has chosen to raise the rates, while the ECB has only indicated accelerated tapering, leaving the rates unchanged. Nifty at 16,630 is also looking for some consolidation, whereas the volatility in the derivatives contracts reflected by VIX is higher at 25.35%. Such corrections do give opportunities for those who had remained liquid. For those who are short of liquidity, some shuffling of their portfolios could have been attempted. And one such stock looks promising during this correction is Asian Paints Limited, which is reflecting a bullish harami as well as a hammer at 2,930. The balanced advantage funds have been better performing in withstanding the volatility and protecting their NAVs, in comparison to pure debt or pure equity scheme. Let us keep learning from such fiascos. As the market opens up on Monday, be ready to pay your advance tax. Have an interesting week ahead.